everyone. Here we will be presentation about tangible asset and intangible asset. Before we start our discussion, let me introduce ourselves. The member of our groups is Regita, Elien, Nisa with the study number 20 01020009 and Afla Azzahra Putri with the study number 20 01020019. We will discussion about definitions of asset, definitions of fixed asset, depreciation method of fixed asset, tangible asset, intangible assets, and conclusion. Now, let's talk about assets. Asset is a resource which is controlled by the company as a result of past events where future economic benefits are expected to be obtained by the company. Asset the company comes from transactions or other events that occurred in the past. Companies usually acquire asset through expenses in the form or purchase or own productions. Now let's talk about fixed asset. Fixed asset is intangible asset whose purpose of ownership used in production or provision goods or service to be rented to other parties for purpose administrative and expected to be used for more than one period. Fixed assets are classified into two. The first one is tangible asset. Tangible asset is an asset that is used in a long time and from physical use of the asset. Example, land, buildings, vehicles, machinery, equipment, coal, and other goods. And the second one is intangible asset. Intangible asset is asset that used are not because of the physicality but because of ownership this asset so that we have the right to do something. For the example is patents, copyrights, trademarks, franchise and royalties. Now let's talk about characteristic of fixed asset. Fixed assets have their own characteristic, including the first one have a physical form, the second one not intended for resale, having material value, the asset price is quite significant, has an economic useful life of more than one financial year and valued the economic benefits can be measured reliably. And the last is assets are used in the normal activities of the company, not for sale again, include merchandise, supplies, or investment. Grouping of fixed assets. Fixed assets have an indefinite life. Example, land, where an office is located or standing factory buildings, agricultural land, plantation land, and land the farm. Fixed assets have a limited life, and if their useful life has expired, can be replaced with other limited assets. Example, buildings, vehicles, machines, computers, and many more. Fixed asset whose life is limited and if it has expired the benefits cannot be replaced by something. Example, soil mining and forests. Now let's discussion about depreciation method of fixed assets. The first one is straight line method. Straight line method is a method of calculating the depreciation of fixed asset that is able to produce the same amount of depreciation expense for each accounting period during the asset useful life. And the second one is number of years method. depreciation based on consideration of maintenance costs and repair of fixed asset. The longer it tends to increase with age of the fixed asset themselves. And the third one is production unit method. Depreciation method for fixed asset that provides depreciation expense based on the expected productive capacity of fixed asset. And the last one is double declining balance method. Depreciation method that provides periodic depreciation expense based on the book value of the fixed asset, which decreases with its estimate life.
Tangible and intangible assets are clearly two very different things even though they have very similar words. Whether it is related to tangible and intangible assets form the meaning, character, and type as will other matters relating to the word on investor. Tangible asset. Tangible asset is the opposite of intangible asset, in the sense that it also has a physical form that can be used and utilized. The character of tangible asset, including the following. The characteristic of tangible asset including the following. 1. From. Assets have physical existence. 2. Liquidation, generally easier to sell in the market due to their physical presence. 3. Reduction in value. Assets are depreciated. 4. Rise. Tangible assets can be destroyed by accident, fire, hurricane, or other disaster. Due to such risk, it is required insurance protection. 5. Collateral. Assets are as collateral for loan. 6. Cost. Easy to determine or evaluate the cost of tangible asset. 7. Residual value. Yes. Intangible asset, or commonly referred to as intangible asset, actually refer to assets of a company which do not have physical form and do not have long-term asset property. Overall, their assets are not intended to be sold someday, either in the short term or in the long term. The characteristic intangible asset. 1. From. Assets do not have physical existence. 2. Liquidation. Not that much easier to sell in the market due to non-existence. 3. Reduction in value. Assets are amortized. 4. Rise. Intangible assets cannot be destroyed by fire or other such disaster, but by careless of business decision. 5. Collateral. Assets cannot be used as collateral for loan. 6. Cost. Much difficult to determine the cost of intangible asset. 7. Residual value. No. Examples of intangible asset: cash, furniture, plant and machinery, vehicles, building, stock, equipment, computer. Intangible asset: patents, logo, copyright, brand value, self-development software, customer data, trademark, and goodwill. Intangible asset is managed to generate a profit for the operation of a company. However, there are different types of intangible assets. There are at least 4 types of intangible assets in a company. 1. Leaseholds. The right of the lease will be obtained from a certain assetless transaction, then legalized by a notary and a certain time. 2. Patent. A patent is a right that can be obtained from a certain invention. 3. Trademark. Trademark is a right that can be obtained from a certain commercial mark. 4. Organization cost. Organization cost is a entry expenditure that arises precisely before the company carries out operating activity. Conclusion. So nobody knew what companies record both tangible and intangible assets. Both tangible and intangible assets are recorded by the company in the book of accounting. Tangible assets are very important for any company for smooth running of their operation. Intangible assets help in creating future work or company. In order to be a successful company needs to have a good combination of tangible and intangible assets. When comparing the two, both tangible and intangible assets have their pros and cons, but they have their impact on the function of the organism. Intangible assets provide any company with its identity through its strong brand name.